Simmer & Jack has reported an increased loss per share of 40.9 cents for the year to March. That's up from 38.7 cents a year ago. Its operating losses also widened from 256 million to 275 million rand. Here to tell us more is Nico Schoeman. He's the CEO of the group. Nico, thanks for coming in today.
Yes, thank you very much.
Nico, you had gold production down 7% over the year, and that's due. That's a shame, obviously, because we have seen the dollar gold price scaling new heights continuously last year. But you've had a rationalization program at your mines. Take us through that a little bit.
Yes, most certainly. Towards the end of last year, in fact in September, we initiated a rationalization program at Baffontein. The aim of that program was to significantly reduce costs in the business, which of course Sim has been a marginal gold miner. We did very well in achieving that targets, whereby we set a target of 65 million rand per month, which in fact we exceeded. However, unfortunately, in terms of the grade that we expected to achieve with the rationalization program did not follow that trend, and we actually saw a decrease in the grade by 10%. So hence we ended up with a rand per kilo cash cost, which actually increased rather than following a trend of decreasing it.
Is that rationalization now completed? Are you going to be closing more marginal shafts at this stage, and when will they be replaced by production from Talikau?
Yes, we are at present have initiated an extension of the rationalization program whereby we will be closing the 10 shaft complex, but also the 12 shaft, which initially was partially closed as part of the initial rationalization program. That obviously is aimed at stabilizing the grade at Baffontein in particular. And then, certainly we expect to see the benefits of Talikau coming through in the very near future.
Do those shafts close regardless of where we're seeing the rand gold price going? Is there a certain level of rand gold price that could keep some of those shafts open?
Yes, most certainly. Unfortunately, even at the current gold price, we don't unfortunately see a part or 10 and 12 shaft playing a part in Sim's business. As much as we would want to capitalize on additional tonnage which may be available from those shafts, the grade, in particular 10 shaft, is just too erratic, and it's just not what the business needs at this point in time. We are looking for stability in the business, and hence looking at shafts, keep shafts operational that can support a stable grade profile in the business.
We've got the dollar gold price currently trading $1,238 an ounce, rand trading around 760. What level of gold price in dollar terms do you need to be profitable?
Look, we certainly in terms of the sort of budgeted numbers, we need to aim at sort of a rand per kilo price in the region of about 280. That of course would include the notional cash cost, but that unfortunately we will only see realizing in the third and fourth quarter of this year, and it was purely driven by the fact that we had that fatality at Baffontein mine on the 4th of May, which claimed the lives of 3 of our employees. That quite significantly set us back from production point of view, and we are still busy in re-establishing the production profile subsequent to that event.
Of course, you also were hit with the 253 million rand impairment charge. That was with TGME being placed on care and maintenance, and it looks like that's staying on care and maintenance for the time being anyway. Also, it's a bit difficult to compare with last year's results because your stake in First Uranium has shrunk quite considerably from last year. It's gone from 62% down to 35% at present, post year end. Do you see a further dilution of the stake? How do you see First Uranium playing out for you going forward?
Yeah, look, we certainly, when we considered our participation in the recapitalization, we still value First Uranium as a significant part of the business, and which obviously supported our participation in the recap. We certainly believe that Mine Waste Solutions in particular, which at present is exceeding their production targets and in fact turning 100% margins, that will be a large contributor to the business, and obviously Simmer shareholders participate in that see-through value in First Uranium.
So First Uranium will remain key to you going forward?
Most definitely at the moment. It is the business is and will remain in the foreseeable future part of the Simmer's business, yes.
Of course, participating in that rights issue has left you with a funding gap at this stage. How are you going to close that gap?
Yeah, most certainly. It's We have, as part of the bridge loan from RMB, that number of 220 million. Conditional to that was a Simmers rights issue. Subsequently, which of course you can understand, at the time it was pretty much the board was left with having to make a very quick decision. That was the option available to us at the time. Subsequent to that, we've considered two other alternatives, which of course, as we've put out in the press, is the potential selling of the first uranium notes, but also we have gained access to a domestic medium-term note program through ABSA Capital, which gives us access to an additional 150 million in cash. Yeah.
I mean, just looking ahead prospects, you did mention that Buffelsfontein, the closure of that shaft due to the accident, had set you back a little bit. You also mentioned the third and fourth quarters you could start to see light. When are we going to see profits though?
Yeah, most certainly. I mean, if we're comfortable that comes the third and fourth quarter of this year, we will be able to stabilize operations at Buffels, and we will of course then anticipate making profit. In the current gold price environment, of course, we will certainly be seeing profits from Buffels even in the third and fourth quarter.
Current gold price environment, how would you see the gold price performing going forward? I think we will see some support for the gold price. Would you expect that to happen?
Yeah, look, we certainly believe, in terms of our sort of internal analysis, we believe that we're going to see a further gold price hike. And of course, with Simmers being a sort of a marginal miner, we operate from a fairly high cost base, and hence we're well positioned in terms of gearing the company.